jump over to the vol. So explosive rally in BTC, back up to 25k resistance. Realized vol popping around 25 points. So it was in the kind of low 30s, getting up towards 60 now in Bitcoin. Ethereum realized not really managing to do a whole lot, slightly higher, drifting from around 50 to close out at around 55 on the week. So pretty underwhelming there. Implied obviously spiking on the move in Bitcoin, up quite significantly there. We go to the dashboard where you can see here, ETH implies pretty much flat on the week, whereas Bitcoin up around 11 vol points. Carry wise, not a lot of carry in Bitcoin vol as the realized did so well. But if we look, we've got nearly 10 vol still positive carry in Ethereum. So that looks like a short still worth having, whereas BTC not so much. Options markets are pricing in either, from my perspective, given how much vols have popped in Bitcoin, they're pricing in either an imminent break or a rejection of these levels. So 25k BTC, 1700 ETH, which is what's giving implied vol such a strong bid, right, and getting it back into the 60s. The decoupling of crypto versus weak risk asset backdrop after bond yields have surged suggests an upside break is more likely. That was my feeling coming into this week. We'll see what happens. If S&P breaks below 4,000 in a material way, then it could be all bets are off, right? But if it manages to hold that level, and that's quite a strong body of support at that level, it's quite a lot of options open interest there as well. People who look at like GEX and things like that in S&P have been eyeing that level, and there's a load of moving averages just shy of that level as well. So if we were to find some support there and risk assets bounce and equities bounce, then I think crypto is going to be your fastest horse in the race and really going to take out that resistance level in style. So that it is becoming a bit supercharged right now, it seems, crypto. Okay, if we look at term structures, so you can see very flat curve in Ethereum, hasn't done a whole lot on the week. If anything, weeklies are slightly softer. The rest of the curve not doing much, but a nice big shift up in Bitcoin term. That front end really popping 10 points here, but the whole thing really shifting, back end even shifting about 5 vols there as well. So the vol spread clearly has moved, right? So a week ago, we had a vol spread inverted here where we were like 16 vols ETH over down to around 12. That has completely collapsed. And we're now looking at, weeklies are sub 5 vols on the spread and the back end is like 6 vols. So this is a complete repricing of the ETH Bitcoin vol spread. We think this is a fantastic entry opportunity. We've been waiting for an opportunity like this and hence have taken advantage of it. But you just look at the graph here, right? The Bitcoin vol spread, this is 6 months history. It doesn't get down here very often, okay? So whilst the realized has flipped negative on the 10-day, you can see that with this yellow dotted line here, the 30-day is still positive. Whether or not Bitcoin moves more than ETH for the next month, I couldn't care less. The longer term implied spread does not stay down here, right? So what we tend to see is this thing's going to mean revert. It's likely to mean revert to, who knows, 10, 15, whatever it is at some point. But getting into longer dated spreads at these levels looks super, super attractive to me right now. So I've started pulling the trigger on some Vegas spreads in September. We'll talk a bit more about that in a bit. Okay, moving on to Skew. So what's going on there? Clearly, a lot of upside calls, buying being triggered by that break higher. So we have seen Skew flip towards calls again. You can see on these charts, when these charts drop, we always look in terms of put skew. So when these things turn south, it means calls are catching a bid, puts are getting offered. So weekly Skew really leading the charge. 4 vols for call premium. That's where Bitcoin has got to. ETH only slightly for calls at 0.4. So ETH definitely lagging. Bitcoin really taking charge, taking Skew into call premium. The back end has even moved as well to a positive 2 vols in Bitcoin. So that we don't really think that's warranted. We think that Bitcoin at some point is going to recouple with the macro and should hold a bit of a put bid in the long end. Something that was echoed by our friend Greg, who runs Amberdata volatility. He kind of agrees with us that risk reversals look attractive in the back end. But generally, when the short end moves, in the short term, when things are spiking, that front end likes to flip towards whichever direction the market's going. And for now, it certainly has been calls. So anyway, yeah, that's kind of what Skew's been doing. Ethereum Skew still in the back end, remains for puts, not massively. We're talking 1 to 1.5 vols for puts, but that hasn't managed to flip to calls yet because ETH hasn't had the big blow off spike that we were thinking it might have. So until ETH kind of breaks 1800 and really starts to push towards 2000, I wouldn't expect the call bid to come in the back end of ETH. You'd probably need that type of price action to get it going. Okay, so that's Skew. In terms of dashboards, what did we said, up 11 vols on the week, up to 58 vol in the 1 month on Bitcoin. So that's about as high as we've seen it in a long time. You can see those big spikes in spot that drove that, where you had best part of 10% on Wednesday, you had another 4% day and another 2% day. Now those moves, not really quite as stingy if you look at the likes of Ethereum. So the implied vol on Ethereum is practically unched on the week. Spot was still up 13%, but the vol's completely unchanged, right? So it just shows you that the move in Bitcoin was the one that was really people were going after and were more surprised at just how violent that was, right? And you can see here the moves that we highlighted in Bitcoin, not so much echoed, not a 10%, but a sub 8% move here in ETH versus a 3% versus a less than 2%. So just not quite managing to do quite as much as Bitcoin, and also Bitcoin was coming from a much lower base vol, so that base vol has repriced because the two assets are moving as much as each other, and people think that once that big level breaks on the upside, you could easily get another 2,000 or 3,000 points on Bitcoin in short order. So that's definitely how the market sentiment is kind of feeling right now. Okay, looking at flows, Bitcoin flows, as we mentioned, pretty dominated by call buying. A big spike in volume, $5.4 billion trading. A lot of on-screen activity as well as the big blocks. The big blocks that went up were the February, so this week expiry, 26K calls in big size. That's this massive pink bar here. We also saw a big clip of the March 30,000 calls trade as well. So these are all getting bought. We did see once the market reached highs, vols reached highs, we did see it stabilize, and we saw a load of cool selling coming in the more in the money region. So anything from the 23 to the 26 area was resold back out to take profit as people were happy to hold on to their out of the money stuff, which gave them more leverage, right? That's how sophisticated option users tend to be. They want to make sure that the options that they own are the things that are lower delta, out of the money, and they can multiply and give them leverage. Once you buy an out of the money and the market rips through it, turns it into an in the money, you're more inclined to take profit. You're more inclined to roll those strikes up. And those are the type of flows that we've been seeing. We also saw some long dated call spread buying, June, September, December, not in anywhere near as much size as the front end. So the gamma really the focus, but those longer dated call spreads do still continue to trade. And then we even found a put buyer in the 15K puts all the way out to September. So that's what we're talking about, where we think those longer dated downsides do look quite good value, certainly relative to calls, because if the macro landscape does deteriorate and we do head into a recession and risk assets have a big repricing lower, we don't really think crypto is going to escape that. So this dynamic that's going on right now, where retail fever is hot again, we think whilst it can persist in the short term, especially as net liquidity has been turning up, we don't think it's necessarily going to be a medium-term thing, right? Okay, if we move to Ethereum flows, so volume's not as high, 3.1 billion, but respectable. Still dominated by calls, but the flows were a bit more mixed. Less outright buying of Vega like we saw in Bitcoin because the vols were so cheap and have had to reprice higher as all that outright call buying came in. Generally, people in ETH are kind of preferring to do more Vega neutral structures, whether it's bullish risk reversals, whether it's call spreads. We saw a big clip of 1,600, 2,200 call spreads in June trade. We saw the March 22 calls trade. Those were the biggest blocks. But, like I said, bullish risk reversals in March as well being traded, and some puts being traded as well, both in February puts. We see here February puts in good size in 10K clips trading on the 1,600 down to the 1,500 area. April puts also trading deeper strikes, 1,300, 1,400. So there's a fair amount of activity going on still on the downside as well, which is why ETH puts do still hold a bit of a bid, as I mentioned, because people aren't completely, throwing in the towel there on the idea that ETH could still go down at some point. Okay, positioning. So if we look at gamma positioning, so we did see a big spike down on that initial, we mentioned last week, we thought the setup was for a squeeze. We thought dealers would get taken short. So they see the spike into dealer positioning down negative here was on that original spike, but we have seen it turn higher. So that kind of tends to signify that we got the spike, dealers scrambled to chase it, they got taken into short gamma territory, and then the people who were along those calls were happy to give some vol, some gamma back to the market by selling that vol back out, right? So that's kind of what's happened. And you can see here in terms of where the longs and shorts reside, 24th of February, so the orange, we see that the dealers appear to be long kind of in the local area here in that around that 25k area. They're short the 2400s, but they're also short the 26 and above. So locally less short than they were, but if we move into either wing, we break back below 24k or we break above 26k, the dealers in Bitcoin look like they're going to get taken short gamma again, basically. Right? So it's a fairly fragile equilibrium in terms of where dealer positioning is in Bitcoin right now, and we could easily see quite wild swings in either direction. Slightly different picture on Ethereum. We did see a spike down on that initial rally as call buying activity came in, pretty quick to come back in line. So we do see a 1700 strike as the big local short that dealers have on the 24th of February. But around that, they've got these purple bars, which are March. So they're long wings in March and other expiries against it. So again, the headline is zero here. We're on the zero line. So it looks like dealers are fairly neutral gamma in ETH. We're not getting as wild moves on ETH as well. That makes sense. But, it doesn't look like the setup is particularly for ETH to go wild in either direction because the dealers seem to be long the wings, whereas it's the other way around in Bitcoin. In Bitcoin, they're long the local and they're short the wings. Okay. In Ethereum, they are short the local, i.e. the close to the money stuff for this Friday, but they are long the wings. So it's a very different setup, which suggests that in the near term, we're going to continue to see ETH realized be somewhat hampered by that dealer positioning, whereas Bitcoin may be somewhat amplified, right? So a pretty similar setup to what we've just had this week. But you would need, like I said, to really see that in action, you'd probably need to see the market break higher. You'd probably see Bitcoin break 25.5 and charge quickly to 28k or somewhere near there, whereas ETH might again struggle and kind of grind its way up towards 1800 and really not explode in quite the same way. So that's kind of how I could see that playing out. Okay, so that's positioning. If we look at what I've been up to, I'm sure you're all dying to know. All right, that's it for today. Made it as quick as possible. Don't want to take up too much time on these for you guys. Catch you all next week. Cheers.